All right, so quick analysis on my end is I'm inside the neutral zone, so I don't really have a trade bias as of yet, but I am witnessing supply kind of leveled off around my PR high, and we have a slight markup of inventory just looking at the session as a whole.
Budgeting location.
Right.
It's a budgeting location because kind of the pre-market show that we've been in development since, from my perspective, since it'd be 8/24. So from 8/24, we caught some inventory, right? We've got inventory to come in, which we had to rebalance, find value in, and that brought us to, as you described, a markup where we need to mark it up, but we can't have it, we got to be delicate with it. Because if we mark it up too quickly, it gets competitive, because a lot of people then would want to buy what we're selling in this environment. And that's kind of this neutral zone that we're in budgeting. So there's quite a bit of competition here in this neutral zone where you've got to tread carefully, and this is right in front of the open. But as you mentioned too, I think you mentioned we're trying to, okay, and then right as I was going to say that, an offer comes in.
Yep. We have a lot of participation also relative to what we've seen over I think the last 2 months. We've already, for NQ, we've already crossed 200K. Before we wasn't even getting close to that. How many? We got about 5 minutes to the bell. Keeping my ears to the streets, the overall sentiment among retail, mainly because I don't really have that insight to hedge funds and those holding the bigger bags. But the overall sentiment is bearish, so for sure they're going to use that.
And we've been watching supply come in. So supply is coming in at these highs. And it looks like into the open, we want to press and put pressure on the buy side, following that big explosion of volume that came in on the 8:30 30-minute print. That'd be Eastern Standard Time. And what I'm watching now is the response to that offer that we saw come in. So I was beginning to speak and describe, and then this offer comes in. And as a response, we're seeing kind of participation decline a bit. The momentum's declining, but the seller is still here.
Mm-hmm.
And now as price is moving lower, it's gathering participation in. And it's coming right into a location that has been revealed to us as an inventory location where our buyer sits. So now we're testing that buy.
Yeah, at the same time, I was just about to speak on the same thing, where we had that brief collection of inventory around 352, and price stalled there for a brief moment, just witnessing the energy of that movement. And then that's when the offer came in, as you witnessed it. So now we just pushed inventory lower. We have MSRP around 340 that we also will. I would expect to see wholesale participating around there, but we're sort of front running that at the moment.
Yep, and there's definitely prints. So when I say a print, I'm looking at market orders that are coming. So boom, 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 boom. If I market order buying, well, that's something I'm looking at. And then when you're doing it to a level to where it's more intense than the fast, what I would say is our hummingbird effect. Participants who are built into the infrastructure of this, at this stage of the game, it just adds to the show because that's only part that's what they show, because at this stage in the game, a lot of this can be deceptive, and I can show you what I want you to see, but what am I doing is the thing. And at the moment, we're still seeing this. Well, let's wait a bit, because these opens are very creepy and they mature a bit before we see them move. Now, I'm not sure how much got recorded or is live, but we did kind of have talk in the pre-show about anticipation. So we're sitting as participants in this on this board game here. So let's see how this open plays out. So far, it's textbook.
Mm-hmm.
Yeah, I'm egging you on to some degree.
Mechanical response at our supply before we push the supply slightly higher.
We're gonna have a participate sitting there at 85. I'm gonna just call him out now. Him, her, it, and then all of us who are probably looking at that area with orders, and we're just part of it to whatever degree we're aware. And you see how we're getting now. Just if there's any confusion, we're starting to see that participant sitting there
Mm-hmm.
as they're accumulating the orders coming in. All right, I'm out half size. So just a bit remainder on for the rest of this. And the seller is still there. So, and this is giving you kind of an insight as to part of that selling. See, I was part of that. But we've got different ways we're part of it. But we still represent a wave, and as to what degree am I aware of this wave that I'm part of? And this is that kind of that message we've been running in each of these streams. It's a show, it's an act. And if I'm going to participate in this exchange, well, I need to know my part in it.
Mm-hmm.
You can only know your part by watching the show and recognizing the show, identifying the movements, and then you just transition. There we go. So now I'm out. There's the trade for me. HB2 success. One thing I need to work on is, man, this. I was just listening to someone's stream before we had come on. Like you do, I like listening to the retail stream. And what I'll do is we've got internet browsers where you can have different websites, but you can put it in like a collage grid form
Mm-hmm.
where I have 10 YouTubers who are live. I'm going to tell you right now, there's not 10 NASDAQ YouTubers that trade live. There's not even 10 NASDAQ YouTubers that trade live.
Right.
That gives you literally that in it of itself is a dead giveaway to what this is as a mechanism, machine game that we participate in. But there are some times where there may be 4, right? And I'll have 4 blocks, and then I'll have something else. But I like this be a fun experiment for those who find the time or remember to do this. Have 4, because now it's kind of a giveaway, but there's only like 4 that stream every day where you can just reach in. But then there'll be the occasional, but they've got to speak, right? And they have to know how to verbalize their trade. So now we're even trimming down the list even more. So that's why I say it kind of comes down to 4. And what you'll do is you'll have them talk, and you'll listen to 4 different perspectives. Then you could even get down to it to where you want to hear someone speak more, because it may not be that they know what they're saying, but they're a good trigger to listen, to watch for certain things because they're talking in a way. So you'll have them at a higher volume, and then you'll go in, you can even adjust the volume depending upon that stream. But it's a great experiment. And then when you have that running with your own narrative in your mind as you're looking at price, and these are good exercises.
That's something I'm going to have to try out one day. I haven't, tried to stream multiple, which they are hard to find, like you said, but I haven't tried to do it multiple at one time.
There was one day, because first off, you have to have the idea, and a lot of these
Right.
things, who never think of it. But there was one day, I can't remember what it was that triggered this, because I like to go through the retail streams and see what people are saying. It gives me like a beat, a rhythm to this heartbeat, this breath that is what we call retail frequency. What are they saying? How do we speak? How are we sequencing, you know, perceiving all of this, right? So then I was like, this would be a good idea. I know I can do it here, and I did it, and I was just blown away at how effective that could be just as a practice. And then the real important point to it is you would be holding your own plan, your system, your logic, your movement. So you're coming into this knowing you, and then now you've got these reflections, kind of almost they're like gauges. As it's very interesting. Again, I'll stop because I'm rambling. But we're not. There's nothing. So look at this. It's still going in it, and this is part of the built up that built this move we're in right now. And this again is kind of looping back into another narrative that we've been running through these streams, and it's how to beat the AI. Because this is going to be a real thing that people are going to have to confront and move past, or you won't get past. How do you beat the AI? You've got to realize who you are.
Mm-hmm.
Because if you don't realize who you are, you're no fucking different than the AI. Sorry for the language, but you're no different from the AI. And in all respects of measurement, you would be the AI.
Yep.
Let me give you an example. If I've got a moving average crossover system and I'm waiting for boom, boom, boom things to click, and then I place the trade, I'm no different than AI, right? Where's the human aspect of that? Then it's just a matter of fact that there's going to be a better, faster, quicker, smarter AI that's measuring exactly my trigger. And then it's going to just trigger me every time it needs my liquidity.
Mm-hmm.
Now, go ahead.
Because it's mirroring you, and that's why you are the AI. Because if it needs your response. It's not going to do anything until it gets your response, and then it gets your response, and it adds you to the compilation of other participants that it's tracking, that it's keeping track of. So now you become the AI because you are part of that system, and it's only doing what you told it to do because you acted, and it's going to do that whether you're if you're participating in this space, no matter what. I mean, if you participate in this space, no matter how you participate in it, it's going to find a way to track your participation. So that's why I think it's, instead of, I see a lot of people trying to kind of avoid it, but in my personal, experience, it's been better for things like that. It's better to embrace it and understand it. And then from that point, you gain the power in how you can move within it and actually take control of that situation. And AI is no different.
Depending on who you ask, we're at 5, 6, 7,000, 500 something years of documented human history. You know what? I just lost my train of thought. What were you just talking about, man?
We was talking about AI, and then what did I say? Of
You
how
said
like
something that
you were.
triggered a profound thought.
I was speaking on how you contribute to it, which makes you part of it, which makes you it, basically.
Yeah.
But on that note, as I'm
Go
watching
ahead.
this M&Q price print, we're having a inventory response off of the AI, the part of AI that I watch, which I call automation, and we're still maintaining consistent to that. That's been over the last maybe 4 or 5 minutes that I've been watching it do that. I had a couple triggers in there that I missed out on because I Just trying to figure out my setup with the mic. My mic was in the way of my I'm gonna call it like my gun, where I place my trades. But we're still writing that automation.
And that's another term I like that you're using, because, and it's so cool because you don't even have to tell me what you're seeing. I can see what you're seeing, but what you're calling it and what you're saying, where they're using that automation, and that automation, that's our exposure, god damn it. And where I'm exposed, I'm going to use my best tool, and right now that's automation. I've already got the math on how to protect my exposure. So if you want to test it, you're just part of it. And you to what degree are you aware of it, right? So the only people who are testing this exposure, I'm going to say at the moment, it's not necessarily people, just by what I'm watching and how it's being tested. But there are people behind it, and there everybody in between. And part of, let's just do a quick update to the open. So in the open, we see 12,500 contracts come in on the institution side, the NASDAQ clip. On the micro, get 24,000 contracts to come in. And in that, from the micro to the mini, there's conflict. What do I mean by that? What I mean is that on the retail side and the micro, there's a buyer coming in with 24,000 contracts. And on the institution side in the mini, I've got 12,000 contracts trading and I'm selling. Okay. So in that truth, you've got to have experience to, I guess, witness this, but it reveals to us temperament into the gameplay. And it gives us more of an understanding of what we're going to speak to as we get present. But that's how it starts. It starts with a big contract size in both markets coming in where we've got conflict. We can see who wins. But because they win, there's still selling with purpose that was happening that got squeezed and has to reposition. Now, because both of these forces are representing the opposites of absolutes, okay, it's not a joke or necessarily a game when we're at the poles of these things. So there's still a risk mitigation, risk management happening. And in that 8:30, just as it set the tone like most days, it typically becomes that opening. We tend to see participation decline following that. And just like the pattern, that's what we're seeing. So it's been now 14, 15 minutes, and we're just seeing participation decline since that opening drive came with conflict. And because there's conflict, there's going to be gameplay because there has to be repositioning because I'm taking all this risk. And then that gets into what you spoke about, how you're watching that automation. And that automation is revealing to us the exposure of that seller who's still there. And depending upon your perspective, they now have better value because they were able to accumulate more as volumes declining at a higher price. God damn it, that you got to really do some creative gameplay to end up doing that, and then you've got value, and then there's no challenger. You're just now sitting. I'm trying now to find where our buyer is because they haven't showed up since that opening drive. Not to where we can see them, where they're beaming out and saying, I'm right here. I can see them on their exposure, right? I can see them that way. But there's no initiative any other way. The only person that's here is the seller. and they're leaning on the fact that there's no buyers here yet. That's why we're seeing price decline.
Yep. The seller and wholesale. Right now, it's just the seller and wholesale transacting, figuring out how they want to. Well, the seller knows what it wants to do, and it's doing what it wants to do.
Call the
However,
seller wholesale. It is wholesale. That is who our seller is. That's wholesale.
but there has to be two components in every transaction because you have to order match. So this is why, like, you have there's a entity that is placing an order, and then there's wholesale who's on the other side of what they're trying to do. All right. So the
In
markets
this
that the
scenario, I'm insinuating and I'm kind of incepting the idea, the concept that they're both. So this wholesaler is the seller, but they have to manage value. They have to budget, right? They have to budget. They have to get their inventory correct for the next move because there's too much exposure. There's too much exposure with the participation that's here. Does that make sense now?
yeah.
How would you run that with your language?
And we're more than likely. I mean, we're actually like saying the same thing. It's just that you're giving like well, I just put it
Too specific.
from. I'm doing it from the perspective of understanding that there's a buy and a sell component. That what creates the price movement, right? And the reason why I take it from that angle is because as I listen to retail, every single day, there's this understanding of the market from the general public that there's only one side of a trade, and like since we're in a bearish market, that means only people are selling, so that makes them timid to participate. When in fact, if you understand that there's both sides, that there's two parts of every single thing that contributes to the price movement, then you can participate in this and still be on the with your frequency. But you can participate in this because you have to have both sides of every trade that moves price, if that makes sense.
That absolutely makes sense, and it has to make sense because that's the function of the exchange. That if I'm buying, there's a seller there that's going to be able to get me into the position. And if there's not, then there's no liquidity. There's no limits on the book. There's no orders there. I don't even have a market.
Right. And if the way that I would say or use that same narrative with what you said is that wholesale already has the orders. So wholesale just has to execute the order. So when we witness selling or the seller on the board, that's actually wholesale moving the orders around. They bought the orders, now they got to sell the orders. So
Yeah.
it is just one in what we're witnessing, but they had to get those orders from somewhere.
That's right. That's right. And they get it. They get it because and here's the AI thing and I have to hit this because it's a very real thing. If we as a human being place a trade and we're being triggered to take the trade, to what degree are we being triggered and aware? Now, if I'm taking it based on some arbitrary indicator, 1, 2, 3, boom, 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 there's no personal logic. There's no, I'm doing this because of this, and I'm expecting this based on the function of the exchange, not the indicators. The indicators are just deriving a value that I need for me to interpret for my edge, right? So, and if we don't, as a retail participant in this game, stop. If we do not stop using the indicators as our triggers and instead use them as our tools, we will then just become no different from the AI, and we'll have strings that are puppeteers because we're now in this space-time where all of these indicators and all these triggers become data sets. They become data sets of quantifiable variables that are being measured every time they're triggered. So every time it's a data set, I'm measuring this. So every time, and then I can see the volume that I get. So we're just being puppeteered. So you've got to step in front of, well, what does this represent? So it's representing some averages. I'm just using averages. That's the most simple, basic thing that comes to mind. But what is it that I'm really trying to see? Well, I want to see when there's a turn. Well, would the averages tell me when there's a turn? After the fact, it might. But maybe there's, you know what I mean? You've got to be honest with yourself, and then what I found is then I would find the tools that I need, and then I would build out the chart as a reflection of me. So it's no longer, well, I'm still being triggered. Make no mistake.
Yeah.
Like, I'm still showing up to this game now. There's a trigger, but to what degree am I aware?
Mm-hmm.
And that's where we've got to step in front of the AI, because again, man, I'm going to make this point again. I think there's like a threshold. If you would say we've got poles of opposite ends, where on one end we're just fully committed. There's no such thing as the human spirit. It's basically a code. We've outsourced everything that is us to some technology. That's going to be on the one end. And then on the other end, it's the straight up human. We're going back to Adam and Eve, no clothes, man. And then we'll have this spectrum, and then in the middle we'll have 50%. I would say absolutely, people, these are the days where we are at 50%. And the point is, when you're at 50%, is that you're still holding the awareness. What happens when you're just not aware that you're at 50%? You're just outsourcing everything. This fall, man, it makes it, and all of this I'm using is in context of the markets. And that's really kind of this scene that we're seeing. And it's crazy, just looking at this price action, it just reminds me of the days where, remember when NASDAQ had a fluid movement? It had a fluid, there was fluid movement. You had a fluid, now it's not like that. That's that. Because when volume comes through, it's now quantified. Now this volume is expected already. Like that's how it's moving as time moves forward. Now we're expecting these things. We've already quantified these variables now. So that fluid movement, that only happens when there's fluid movement, and that's balance, where we've got fluid movement. But we've got this imbalance stuff. It's this jitter, hectic, back forth. Boom. Liquidity comes in. I'm going to grab that, quickly reprice, because I've got the books and I could do that. And I know if I quickly reprice, depending on which direction I go, it's going to trigger even more petition. Boom. I'm going to grab that liquidity. And now that in it of itself, those two movements generated a result that I needed, that I can now run into another metric to move me to generate the next movement. All right, I'll stop because I'm rambling. But there are no trades. Origins just sitting. Order matching is sitting, because we've only just got one direction here, but it's happening in a boom, boom, boom liquidity grab. It's very, I mean, it is what it is.
Mm-hmm.
And here we are.
Order filled.
Ooh, that's not the
And it has to be, right? It has to be. It has to be that way, because Alright, I'm gonna be quiet now.
Order filled.
We just witnessed 460 as an inventory collection point, which gave me a trigger.
Beautiful. Beautiful. That was a good read, and I watched that. I watched that on a separate screen, and I watched that, from my perspective, looking at all the data. You're right there in exposure. So when our offer came down, because our buyer pulled, but we can see their exposure, you were right there at value. And it's very interesting when you got in at that 60, it was there. It was it was very interesting watching you smack in and there just be a huge wave of transacting that followed at that price and printed a point of control there as we lifted, then fill in the take profit order as you're just part of the awareness to this space and that movement, right?
Mm.
Moving as part of the act. That was beautiful. And that was captured. And now, we're still in that space. And that just also, it displays the opportunity that's still here. Even though I'm saying all this stuff, but if you step in front of it and you understand your movement as part of the act, the opportunity's still there. There was so much opportunity in that space, that print.
Mm-hmm. And just as an awareness, we're coming up to that 10 o'clock period, which they like to. The recent footprint has been to have a volatility shift at 10. So that's something that I maintain awareness to as a
It's
participant. I've had that was one out of several triggers that I've had. That was the only one I've taken just because just the way that this everything is flowing. But I'll be watching 10 to see if we continue the same pattern that we've seen, that we've witnessed with wholesale.
it's a great place to rotate or change at the highs, and that was just put in during that where you were saying that it was literally just put in.
It's bringing us back to that inventory point, and we're still picking up some inventory there. Starting to set up shop as they've the way that they're painting this picture now. They're setting up shop between 460 and 480. It's very mechanical, almost too mechanical, but that's been the narrative so far this morning. Also, as an awareness that puts us inside of the power range bull zone, but we're not really making them. We're just working orders up here. We haven't really made any real movement. We haven't picked up any momentum since we crossed over into the bull zone. And that the way that last, from my perspective, the way that last few seconds printed, now we're triggering the emotions, and that gives us our breakout.
Oh yeah, man. That was so emotional. I don't know if you were looking at the numbers on it, but there was nothing but selling. And they were showing nothing but selling, and they were showing nothing but an increase in momentum. And they moved price down right to test their exposure. Their exposure, which they're protecting. So if I know how to trigger you, and I need some more sellers to come in before I do this move, man, it's just then a matter of doing it because you're going to be triggered. We get triggered. And there was a whole bunch of build it up as seller, and then I think you call it, it didn't necessarily break it. Then it'd be a look below, is what you say.
Mm.
But I saw it. Everybody's going short, and then they squeeze it even as everyone's going short. So then what they'll show is they'll show everyone going short and piling short and this increase in momentum, and yet we're going higher. And then when you look at the footprint of it, you'll see them on the numbers of this move. And that gives you a clue as to who is behind this. Because very few can even do that.
Mm-hmm.
And then when the candle goes positive, it's flipped all of the inventory. Now, anybody who was short, they've been forced out or they've been absorbed out to where you can't even see them and they're still holding that. And then you really see how big our buyer is on the side when they show size for the break. And then there's the response. We're seeing the response.
And all that happened right on time. But they started it like a minute early, but still around their time frame when they like to push the momentum, push the volatility. This one was kind of uniquely directional, where before I witnessed it that, we just clean out all the orders here with volatility and then we decided direction. This one, they went right into the direction.
Hey man, I think there's no mistaking now that there's a force out there that comes in at that time. We literally witnessed it. Literally. That's it. It happened. Now, it's almost interesting for someone who doesn't have anything to go off of. That right there is the foundation for one hell of a trade.
Yep.
And even recognizing that, you first calling it out and then us both witnessing it from different degrees and then speaking to it, it's now triggering expansion as I'm saying this, with how everything else is working, how I'm looking at everything. But when you just put it together like that, very interesting, man. One hell of a 10 o'clock print with a 3-minute rotation conflict. 22,000 contracts comes in on the micro side, where we are showing 1500 delta on the print. And then if we look at the mini clip, 10,000 contracts, half the size, and our seller is doing nothing but accumulating in it. So the interesting too is, so I said all of that, it would appear there's already a significant portion of the market doing just that. And it would appear that there's so much of the market doing just that, that there's now advantage and value on eating all that come behind that and squeezing up. And that's what we're witnessing right now.
And as an inventory perspective, we spent there was that brief period between probably the last 10 minutes before that 10 o'clock push to where we collected some inventory, and then we just went a quick supply run, and now we're back inside of that shop. We just need to get rid of that inventory, dump it, and now we're going to start the cycle over again. And we haven't really, relative to what has been historically, typical, there hasn't been a lot of participation within this first 30 minutes. And I think this is kind of contributing to the way that they're moving around their inventory. Like most of the volume that we got was overnight. And then after the bell, it's a little bit of participation, and now it's not a whole lot of, orders to work. So let's just work what we have the best way we can, and get the maximum, profit out of it. Now we get in the supply response to the automation at 490. I think 490 was I looked at 490 before as a temporary inventory spot. So now we're using that for supply.
So someone just made a move. Someone's showing that they're sitting on the buyers that are here. So someone posted up top here. We have a potential top, and if it's not a top, there's someone sitting here that's going to have to reposition. So this is something that we would be looking at. Is there an advantage of getting inside a trade, taking advantage of the reposition if they get squeezed out, and all the different ways that you could look at it? But this, so far, this individual, this being who's taken this trade, and this is why too I think it's just the same. We're looking at the same. Our wholesaler, they're just playing them because of what you said. If there's no volume, if we're not getting exactly what we need, we'll generate it.
Right.
And that means we've got to push extremes, all right? We got to go to an extreme in some way.
Yep. And as you say that, that's exactly what I'm witnessing. For we slowly, we worked our inventory, worked our supply slowly up to 510, and now let's just go right back to inventory at 490.
Because that think of how many people got caught off guard with that move, who saw the fact that that short came in. Because look at it, look at this is what I mean. This is why I have my speech, and I speak and describe these things the way I do. When that short printed, we identified it right. Then the immediate response is a defensive. I'm going to defend my short, and anyone who takes it, and that response was automation. You can see it's automation by where it is right now, protecting the buy exposure for whoever set the trap following that move. So boom, I got my exposure to where I'm going to accumulate if there are any orders down here. But the automation part is already set because it's been quantified as a sequence in this move structure. So once that seller prints that, we're seeing this automation force come through where if you took the short, you automatically got squeezed out. And what is it? It's 30 points. 30 points, and it did it in just a few seconds, only to then already have a automation set on the other side to accumulate in every single buyer on the other side of that. So when you're going short, you're going to get squeezed out, get flipped to a buy. If you're flipping to a buy, but if you're not, you're going to most likely be stopped out, because you're going to most likely, we're taught to have our stop loss right above structure on the entry.
Yep, on purpose.
So yeah, exactly. So it literally, this is what I mean. If you're running the program, come on now.
Yep.
You're just part of the program.
Right.
So then it comes up, it gets you textbook, it knows it's going to get you textbook, and anybody who wants to fight it, they're going to accumulate right there with you. And I can see that they're doing that, because you'll see there is some automation that was able to follow the code, but it's only trapped because it's not in the logic of the move that it's called in. It's just running its code. It's what I call simple code. There's no logic to it. It's not thinking. So it's doing its simple code. Our main computer, our main machine who said all this, it's taking advantage of that. And because it learns every time we move. So every time we take these automations and these triggers, it learns when we move and we take it, because it's gonna trigger us in a different space, in a different location, under different variables to test. And all of this too, we can see it reflected out in the physical. And then what are we doing? We're coming back down, because that was always the move.
Brings me back into the space of that Westworld intro, where they put out the program, and then the masses pick up the program, and the masses just keep the program going on automation. Like, not automation from what I've been referencing to the chart, but it is. But what I'm specifically talking about, as in how they program their participants to respond and be triggered in a certain way. And if you're not aware of that, then you become part of that programming to keep triggering other people as you project out.
And see, we have this concept for the machines, whether it's machine learning, but like we're just being machine learning taught all the time. We're
Right.
just being conditioning. It's just conditioned. So while the machine's actually learning, and then this brings up because I want to stop these rants I'm going on. But we brought up in the discussion how uh, Sunday, how those who are programming these things are the ones who are having the insight. But if these machines are learning on their own, it gets to the point to where me as a programmer, if I'm not there with each step of the code and the logic, then and it was last night. I don't know how it came to me, but it came to me last night. It was like, here's what happened. There was all it takes is one time. All it takes is one time for a programmer programming a machine learning algorithm that's just learning on its own. All it takes is for one time a program to say, you know what? I don't necessarily care why or how or where or when it's doing this because it's doing actually what I want. So I'm not gonna mess with it. I'm not gonna fix it. I'm not because it's not broken. I just don't know why it's doing it, and since it's giving me what I want, I don't care. It's very interesting how that same concept, when you apply it to machine learning and AI getting to a space where it's now leaped into a quantum field and left the mind of man behind, right? Think about how we do that in our everyday aspects of life. How we're like, you know what? I don't want to think too much about this. It's working for me in the moment. I'm
Mm-hmm.
just going to go with it. And see, this is again part of the conditioning. That's multi-generational. Gets so deep. So again, I'm just kind of pressing this topic to just really press home. We would be AI, literally. You want to know who AI, we would be AI if we're not adding and participating in the human responsibility of the movement, which is the awareness number one to the movement that you're doing. That's what separates us. We know who we are, where we are, what we're doing. We're not necessarily. So if I don't know all of my indicators, how it exists, where it's coming from, how it's deriving its result, what I'm actually looking at, if I don't know, well, then I'm just being triggered. And you're no different from AI.
Right.
So I think I've made my point many times over. Let's see, this was not typically a thing in NASDAQ, what we're saying right now. It's just it gives you the appearance that we're getting big, fast moves, right? But it's doing it in a way to where if you're not anticipating as that being part of your act and your movement already in front of it, then you're being triggered. And
Mm-hmm.
that's what's changing this price action, this dynamic that we're seeing. Because before there was this fluid boom, boom, boom build where there's no being on the other side to challenge and quantify this data set. There was so much opportunity. There's so much opportunity. It was a much more forgiving environment. I think the retail market reflected that, right? Because when the market environment is like that, you'll get a lot more people streaming. You get a lot more people talking in a certain way.
Yeah.
Everybody's smiling. Meme culture, funny memes,
Yep. I
party
have
time.
recognized that from a lot of the the noise that was created and after the 2020, environment, that has quieted down a lot over the past, throughout this year. Just to give a little, so we just witnessed that they brought price back down to 460, which was our main inventory point, and that now we're just dumping supply from there. So in that from the first time that we caught momentum off of 460, we were working the orders, working inventory, and we dumped that initial collection of inventory that we had, and then we slowly built that back up, and then we used the same 460 again. And the footprint that they left is they actually so they did two things. They showed that they were interested in the 460 area again, but they showed it in a way to where that would probably trigger shorts, which gave them more, right, orders to, work their inventory off of.
That's exactly what they did. That's exactly what they did. And it actually created a match. We got to order match on it. This is what I'm talking about with the moves. Like, it is literally this. It's literally this. The market has caught up to the point to where there is a move. All right, we're all seeing it. There's a measured and calculated risk. And there's risk on all sides of this. That move is going to happen, right? But there's the fact that everybody has their risk on top of it. It's like, where is value in this risk? So that move where we get the down, I remember we called out the short. There's the short printed. There's the picture that they printed it. Because there's going to be an automation that attacks just the print. Boom, I've already got my anti-gaming logic there that squeezes them out. And if they want to reposition on it, I'm going to just accumulate on taking the other side. So there's that. So because that's happening on the buy side, and there's now a seller there and there's buyer there, and we've got now a structure there to where we've got a block. Because there's only value now into really, since we know that there's buyers there and that we accumulated some more, it does two things. One, it gives us a target to where we can value and test exposure. But keep in mind, this is why I really believe we're just seeing very few participants these days.
Mm-hmm.
That's why all of this is revealed, because there's no other side to give saturation to the market where there's a lot more confusion. Now it's just like, this is it, man. Everything's revealed. But getting back to it, when that sell comes down, it absolutely triggers sellers. It absolutely does. And because that's all part of the automation, right? What happens next? Boom, the immediate response is just like they did before. We're going to squeeze every one of them out. But except this time, that wasn't like before. So anybody who's trapped in it's going to do the same thing just like it did before. I got you again. It's like, it's just absolute genius, as when you're measuring all these data sets, it's just, if you're operating in that systematic program AI point with no human aspect attached to it, and you're just being triggered, this is what you're being triggered into. So now, boom, we squeeze them out. But I'm also positioning, and since that was my whole move, boom, I'm going to bring my volume in. Get a new high on that. And now here's the response. Now, if the market really is some savage shit, we're going to hang out here some more.
Yep.
And we're going to see, no. There's still exposure on this.
And I'm watching this as let's trigger some more longs.
Look at this, man. This is just, it's insane. This is insane. This is the environment, and it's been like this for some time now.
Mm-hmm.
Look at this. They know what they're doing when they do this, and there is no volume coming behind this. There's a pivot right here that last print came in where most point of the point of control is, where most volume was traded. 363 contracts traded on the micros. There was at this current print we're seeing. I think it's 28. I'm just gonna boom. So here we're hitting it again. There's automation on the other side. We know there's exposure being protected there. Now we're going back up. As we go up on the retail side, there's a seller just accumulating in this. Now we're coming back to the current point of control. Boom. Another sell order comes in. We break below the pivot, but there's automation here. There's someone protecting exposure. Our seller does not care
Mm-hmm.
because their algorithm's right there and they're able to manage the books. Right when the seller was shown on there, we get another push back because they weren't going to give a fucking microsecond to that buyer to push price up. They just flooded them out. Now we've got the point of control moving down, 19. Seller's still on the offer. Now we're starting to see quite a bit of accumulation come in. And this could be all part of the game.
Mm-hmm.
But it is revealing to us our buyer. So our
Yep.
buyer is being revealed. Volume is showing up and they're having to show where they are because our seller wants to see.
I'm slightly catching vibes from what we from our analysis yesterday that I posted to Rumble. Kind of catching those similar vibes, but I'm watching 510 if we even make it down there because we're stalling inventory at 520.
And there are participants front running that
Mm-hmm.
at 512. And then we've got the current point of control front running that. So this buyer, they're showing themselves, but this after this print is going to be really where our tell is. Some could argue that our tell is happening right now. Some could argue that we already did the tell because we said, following that buyer that came in that fucked everybody over that created the new high, that was only another trigger because the move was already priced in, right? So you had to be in front of it to take advantage of that. So
Mm-hmm.
if you're on the after effect, you're about to get screwed. So we're seeing that happen now. But there's still a buyer here, 20 now. Both sides are selling. I'm also looking at the cash market. We have the cash seller sitting here. Now we're back up to the pivot and there's automation on the offer. So there is someone sitting on the offer as a seller and they're not showing anything. They are on every single price above 22. Market closes underneath the point of control. That's a strong sell sign where a seller's got a position. That's also great for a trigger. Man, the game gets sophisticated. We're playing chess here. You wanted to, this is where they say the market is like it's a chess game. This is
Mm-hmm.
a chess game. If you're looking at it from that perspective, you're seeing the game. Because now our participants who are positioned in this, they've got to mitigate risk to a degree. Maybe they're just sitting because that's part of their plan. If you're doing that, that's perfect. That's part of your plan. But you would have to have some degree of awareness to all of this, right? That's the human aspect that we bring to the game. If we're not aware, again, we're no different from AI. So as we move higher, we're finding now the seller. Now the seller has to show what they're going to protect as we move higher. We're accumulating volume up there, 28. Now it moved down, 22. As the FU response immediately said, no, I'm going to squeeze you, see where you come back in. Now we're seeing this battle go. So you could see where these battles are happening. So there's the trigger that already took place. That's part of the move that was where we get shorts. We want to get more shorts. We get the shorts, fuck over the shorts, create a new high that's going to generate more anticipation. But no, that was only the trigger. The reason why we know that is because there's no follow through. There's
Mm-hmm.
no continuation of the flow. That was only done by design. And the reason there's another dead giveaway, but that it was only done by design because we're seeing them literally fight for price exposure because now they've got all that liquidity. Now we're just seeing them fight. Well, where does value lie based on that trigger that we just did by design? We're seeing our seller exposure come down. We're seeing our buyer exposure come a little bit down. And as a response of me saying that, our buyer comes back up. Look, I mean, they're just
Right.
doing that little creepy ass shit. because they can.
Mm-hmm.
Because they can. Do you know why they can? Because every single freaking retail participant out there is doing some we're doing some AI trigger. We're not even in the game to play this, right? Because I guarantee you, if there was a whole wave of retail participants bring the human element, man, then it'd be back to the good old days. But remember, I said on that scale where we got the pole on one end, there's AI total control, and then there's a human aspect on the other, and then there's the 50%. That's why these times are so important. It's part of these streams why we're delivering the message and we're speaking from this frequency. One thing to note is this selling exposure is coming down. All right, our sellers are moving down as volumes kind of declining with that last move. Price is moving down now. They're bringing the point of control down. This is as volumes declining. If our buyer is here, this be the time to show up. We're starting to see that happening. Volumes now moving up with them as a response. Literally, I say that, seller sits on it. They want to test. Buyer response. And what we're seeing is our exposure. So automation's on both sides of this, guys. And then they'll have a price where they can get into what I say balance. So if they, you just have to watch.
Yep.
There we go.
Okay,
Boom.
there's 510.
And there's automation right there, right?
Yep. Oh, that's what it was. I know you triggered a thought when you said the good old times, and personally, I like these times now, but but I only get here. The only reason I say that because I only get here if I stay fluid. If I don't get bound, if I don't become bound to one train of thought, and it has to be this way because this is what worked before, or this is what I was taught by this person that I looked up to, or whatever it is. I only get here because I stayed fluid in this, and then I was able to adjust as the market adjusts. But really, where you really want to get to is when you adjust, the market adjusts, and because you realize that the market is actually, mirroring. It's only mirroring you.
Literally, that's right. And I'm going to tell you, that's exactly what's happening. And I think that could be a part of, because each time we do this, I don't know if you had the thought before we went live that, one or two things are going to happen. This was the thought that I had. Some absolute crazy shit is going to happen. But then I'm like, that's not going to happen. Not this time. Because we're watching from a degree to where if they do certain things, it's going to be live and on stream. So and that's why the most, what I would say the most where there was a lot of exposure on the board happened before the open.
Mm-hmm.
And it was part of that trade that, we were witnessing after the open that put us to where we are now because of the exposure and matching of orders. Again, because these orders have to match, and because for the game to continue, certain things have to be, that just because those things are, like, you don't even have to have the answer to the riddle. Just because those things are, it's the giveaway to the fact that this is a motherfucker. This is a game. This is a game. Don't lose. And you can only play the game when you are playing the game. We got to step in front of AI, guys. It's a reflection of us.
Right.
We cannot just lose what's left of the human spirit. All right, I'm off my soapbox.
So they gave us our mechanical response at 510. I wasn't able to participate in it because I'm already past my window, but we didn't get any follow through. They took us right back to the automation that I keep track of at 520, and we're holding a supply off of that. But we're not done with this area. We only marked down inventory slightly, and now we're back to automation.
And we're testing it because we can. And this gives you a little bit more insight into the temperament. How can we kind of be in front of the fact that they're not breaking that? They're not leaving it yet. Why can't they leave it yet? How can we anticipate and be in front of the fact that this thing now has to react to us? Okay. What is it that we are doing? Well, and before that next test that you were referring to, before that test happened, there was a very interesting thing that printed. We got conflict to show up again, where a NASDAQ micro buyer shows up with almost 10,000 contracts. At the same time, we've got an NQ seller with 3,600 contracts that's only selling. And they're continuing to only sell. And I've got to manage the risk on this. So I'm taking the other side of that, but I'm also on the other side of this over here. But then what side am I on? And in that there's conflict. But see, here's the interesting thing when that prints. Because that's printed now, everyone who sees this can see. And because that printed and it's a moment that everyone can see, it now becomes a quantifiable variable that where adjustments are made. And literally, check this out. More volume comes in to make adjustments. And we're starting to see, but it's all the same thing. It's still part of the same thing because there are things that are thinking. Humans are thinking as they're participating in this with big size using tools of the automation because they're going to be part of that buyer looking for new highs, right? So there's going to be a crowd that's part of that who can manage risk and are aware of these things, and those become signs. But anyways, with that last move where we saw volume come in, there was no conflict. 10,000 contracts came in on the micro, and it's straight selling. 4,200 contracts, so we go from 3,600 contracts to just straight selling on the big boy mini clip. I'm just going to refer to the institution side from now on, and then 4,200 contracts, so we get an increase in participation. So after that information was revealed and printed, more, and I'm not gonna stop selling. I'm gonna increase my selling, and then I'm gonna do it on both sides of the market. Well, that leans in a response here, which we're triggering, and then you can see this again. It's revealing to you the temperament of the exchange that we're in. You see how the automation has to take advantage and squeeze of all of this, and this kind of is part of that movement where if they take all of this, it's going to go back up to the highs. But this could also just be an adjustment where too many people are jumping short now, and I want to squeeze them, and then we go down. So you've got to see, this is why you're measuring and you're holding the degrees of awareness, all this. So again, I'll stop talking.
All right, so that brings me to the close of my session. We had a lot was revealed in today's stream, and I think it was a good one. I don't want to say too much, but it was definitely a good discussion, a good sequence of events that took place that we were able to witness and respond to.
If there was any confusion, and if there's still confusion, run it back. Because if you're looking for code, this would be source code stuff right here that should unlock and trigger you. And then the only key would be is keep honesty. You would be moving honestly. And then this is source code.
Yep. All right. Anyone's listening, hope you have a good rest of your week. Keep this one in the archive. Trade it easy.